Welcome to XRP Pro Ledger. Today we need to address something directly before we get into the data. The developments that landed in the last several hours represent a simultaneous escalation across three completely separate dimensions of the XRP institutional story. The convergence of all three in a single evening session is the kind of market structure event that does not announce itself with a price move until well after the positioning has been completed. The ETF competition between Bitwise and Canary Capital has reached a critical threshold. Bitwise is less than $3 million in assets under management away from overtaking Canary Capital as the #1 XRP ETF provider. This competitive dynamic is creating a structural buy-side demand wall. Neither firm can afford to step back from this without conceding market share to the other. Simultaneously, confirmed details emerged this afternoon regarding Ripple's Kyobo life insurance partnership in South Korea. Specifically, they are actively testing the settlement of tokenized government bonds directly on the XRP Ledger. This positions XRPL as the settlement infrastructure for the most strictly regulated government-grade financial instruments in the world. And Whale Alert tracked a movement of 22 million XRP from an undisclosed wallet directly to a Ripple-linked on-demand liquidity corridor hours ago. This signals real-time cross-border settlement demand that is operating independently of any investment thesis. Stay with this analysis through to the end. I am going to explain precisely why the Kyobo Life tokenized government bond testing is the single most institutionally significant XRP development of the past 90 days, and why its implications extend far beyond South Korea. Let us establish the current price structure before we address the institutional developments. The $1.43 to $1.46 battle zone that XRP is navigating this evening exists within a technical context that the individual session data cannot fully capture. XRP briefly breached the $1.45 resistance level on the 1-hour chart this afternoon, with 24-hour trading volume running at over $1.80 billion, a volume figure that reflects genuine transactional activity in the market rather than low liquidity price drifting. The RSI is trending bullish, with the $1.52 level identified as the near-term technical target by multiple analytical frameworks. The significance of $1.52 is specific. It is the level that, if sustained, transitions the current consolidation from a range-bound compression pattern to a confirmed directional breakout with the momentum metrics aligned in support. The $1.80 billion in daily volume provides the liquidity context for understanding why the price can sustain a breach of the $1.45 level when it occurs. There is sufficient transactional depth in the market for institutional scale orders to execute, without generating the kind of order book thinning that produces unstable price spikes followed by immediate reversion. The volume floor being this high is itself a structural signal about the depth of institutional interest in maintaining exposure at current prices. The ETF competition between Bitwise and Canary Capital deserves a precise analytical treatment. The competitive dynamics between the two firms are generating a structural consequence for XRP's supply-demand balance that is independent of any individual firm's investment thesis. When two institutional asset managers are competing for the #1 position in a regulated financial product category, AUM ranking determines fee revenue, marketing positioning, and institutional client perception of market leadership. Neither firm can afford to reduce its accumulation pace without creating the risk that the competitor uses that pause to overtake them. Bitwise, being less than $3 million in AUM from overtaking Canary Capital, creates a specific competitive pressure dynamic. Bitwise has every operational incentive to accelerate inflows to close that gap, while Canary Capital has every operational incentive to maintain or accelerate inflows to defend its position. The result is a structural buy-side competition where both firms are simultaneously motivated to purchase XRP at the prevailing market price. This creates what institutional market analysts characterize as a permanent buy wall. Franklin Templeton's consistent inflow activity alongside both Bitwise and Canary Capital means the buy-side competition is operating on three fronts simultaneously. The $75 million April inflow milestone that has been crossed reflects the aggregate output of that three-way institutional accumulation dynamic. I want to isolate the Kyobo life insurance tokenized government bond testing news for the detailed analysis it requires. The institutional significance of this development is being substantially underweighted in the commentary I have reviewed. The reason for that underweighting is that most analysts are treating it as a partnership announcement when it is actually a sovereign financial infrastructure validation. Kyobo Life Insurance is not a technology company experimenting with blockchain on the periphery of its business. It is one of South Korea's largest life insurance institutions, managing long-term capital under the oversight of the Financial Services Commission, one of the most rigorous financial regulatory environments in Asia. The decision to actively test the settlement of tokenized government bonds on the XRP Ledger is not a marketing initiative. It is an operational evaluation conducted under regulatory supervision, involving the most conservative and most strictly governed category of financial instrument in existence: sovereign government debt. Government bonds are the benchmark against which all other asset classes are measured for risk. They are the instruments that central banks, pension funds, and insurance companies hold as their most fundamental store of value and liquidity reserve. The fact that Kyobo Life is testing government bond tokenization on XRPL and not on Ethereum or a private consortium chain is the institutional validation that no marketing announcement can replicate. The implications of Kyobo Life's government bond tokenization testing extend well beyond the South Korean market in ways that require a precise understanding of how institutional adoption cascades through the global financial system. When a major regulated financial institution in a G20 economy actively tests a specific blockchain infrastructure for the settlement of sovereign government debt, they are generating a due diligence record, a documented evaluation of the technical capabilities, security architecture, regulatory compliance characteristics, and operational reliability of that infrastructure under real-world conditions with real financial instruments. Every other insurance company, pension fund, and sovereign wealth fund in South Korea is now aware that Kyobo has initiated this evaluation. Every comparable institution in Japan, Singapore, Hong Kong, and the broader Asia-Pacific region is watching the outcome of that evaluation as a reference point for their own infrastructure decisions. And every global institutional investor with exposure to Asian sovereign debt markets is tracking the development of tokenized settlement infrastructure for those instruments as part of their operational risk assessment. The XRPL is accumulating due diligence records from institutional evaluations of this kind at an accelerating pace. Each new record makes the next evaluation easier to initiate and the next institutional commitment easier to justify to investment committees. The 22 million XRP movement tracked by Whale Alert to a Ripple-linked on-demand liquidity corridor is the real-time operational signal that contextualizes the investment demand story within the utility demand framework. The distinction between these two demand types is analytically important for understanding the durability of XRP's price support at current levels. Investment demand for XRP expressed through ETF inflows and long-term cold storage positioning is durable but theoretically reversible. Institutional investors can change their allocation frameworks. Utility demand for XRP expressed through ODL corridor activity and tokenized asset settlement transactions is structurally more durable because it is driven by operational necessity rather than investment decision-making. When a financial institution needs to settle a cross-border payment in real time at minimal cost, they need XRP for that transaction, regardless of what the investment community's sentiment toward XRP happens to be on that day. The 22 million XRP moving to an ODL corridor this evening is not investment positioning. It is a payment being prepared for execution, and the demand it represents will recur with every subsequent cross-border transaction that uses the same corridor infrastructure. The $XRPHAI ecosystem development, the XRP Healthcare AI token launching for trading on MEXC, represents the ecosystem expansion dimension of the XRP story that institutional investors track. It serves as a leading indicator of network utilization growth. New token launches on the XRP Ledger ecosystem generate fresh trading volume and fresh user engagement with XRPL infrastructure. More meaningfully, the specific combination of healthcare and artificial intelligence use cases that $XRPHAI is targeting represents the category of novel application development that institutional technology analysts watch. The XRP Ledger was designed for payments and settlement. Its native DEX, its tokenization capabilities, and its low-cost transaction environment make it viable for a much broader range of financial applications. Ecosystem tokens that bring new user bases, new transaction volumes, and new development activity to the ledger contribute to the network utility metrics that institutional technology evaluators incorporate into their infrastructure assessments. The fresh volume generated by the MEXC launch is additive to the baseline transaction activity driven by ODL corridor usage and government bond tokenization testing, all of which contribute to the network health metrics that support XRPL's institutional credibility. The structural buy wall that the Bitwise Canary Capital competitive dynamic is creating deserves a quantitative framing. The less than $3 million AUM gap between them has specific implications for the pace of institutional accumulation that will characterize the next several sessions. In the ETF product category, AUM rankings are updated daily and are visible to institutional clients in real time. A firm that holds the number one position commands higher fee revenue and stronger institutional client perception of market leadership. The competitive pressure on Bitwise to close the $3 million gap and on Canary Capital to defend or extend its lead creates a specific inflow acceleration dynamic. This will persist until one firm establishes a lead large enough to reduce the competitive urgency. $3 million in AUM at current XRP prices represents approximately 2 million XRP, a quantity that can be absorbed from the market in a single institutional purchase without moving the price meaningfully given the $1.80 billion in daily volume providing order book depth. The competitive race to that 2 million XRP threshold is happening in real time. The price stability it creates at the $1.43 to $1.46 level reflects the structural consequence of that competition rather than any absence of directional conviction. The April inflow figure crossing $75 million provides the monthly aggregate context. It allows us to project where total ETF AUM will be as the continued institutional accumulation from the three-way ETF provider competition begins generating its structural market effects. At the current April run rate of $75 million in monthly inflows, the annualized inflow pace for XRP ETF products has reached a massive level. It places it in the same order of magnitude as the early institutional adoption phases of the most successful ETF product launches in recent financial history. The cumulative AUM trajectory from this pace projects to a figure that within a relatively short time frame would represent a meaningful percentage of XRP's total circulating supply locked in institutional custody. This supply compression outcome changes the fundamental supply-demand dynamics of the asset in ways that current prices do not yet reflect. The Kyobo Life government bond tokenization testing adds a non-investment demand source that grows independently of the ETF inflow trajectory. This creates a dual demand structure where utility demand and investment demand reinforce each other's price support. The complete picture assembled from this evening's data is one that requires stepping back from the individual data points and reading the convergence pattern they collectively represent. The ETF competitive battle between Bitwise and Canary Capital is generating a structural buy wall that neither firm can abandon. South Korea's Kyobo Life Insurance is actively testing XRP Ledger settlement for tokenized government bonds under one of Asia's most rigorous financial regulatory frameworks. 22 million XRP moved to an ODL corridor this evening, confirming that real-time cross-border payment demand is operating at commercial scale. The ecosystem is expanding with new utility domains being built on XRPL infrastructure. April ETF inflows have crossed $75 million with the competitive accumulation dynamic showing no sign of deceleration. XRP is testing $1.45 resistance with $1.80 billion in daily volume and a bullish RSI pointing toward $1.52 as the near-term technical target. Each of these signals comes from a different analytical domain. Their simultaneous convergence in the same direction on the same evening is the structural evidence that the institutional foundation being built beneath XRP's current price is broader, deeper, and more durable than the flat daily chart suggests. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.